Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hello active traders, and welcome to another episode of the Ken Tank. This is Ken Calhoun, president of the original Day Trading University and TradeMastery.com, coming at you with 7 helpful 2017 trading resolutions for the new year. And I know that New Year's resolutions are usually broken by February or March. Let's not do that this year. Instead, let's take a look at, just briefly, a checklist of things that you might want to start doing a little bit differently this year to help you improve your trading outcomes. The first one is always for life going to be keep smaller stops when you're wrong. And I've talked about this a lot, so I'm not going to spend much time on it other than to say, for example, if I'm trading KAR, which is one of our breakout picks for my Swing Scans members this week, I'll use no more than a 2-day loss of support as an initial stop loss for a swing trade. So if I get in somewhere north of 46, I'll get out if it loses the 2-day support line. No more than 2 points or so. And for intraday trades, anywhere from a dime or so, 10 cents to break even is my goal for the majority of our exits for our live trading room members. I specialize in break even stops if things don't keep running up. That's really important. Try to keep stops as inexpensive as the cost of doing business as a trader. You want to keep your cost as low as possible. So doing smaller stops really helps with that. Second, I'd strongly encourage you to do more testing and paper trading. I recently did a very popular course, and it's available for download now if you wanted to get the downloadable version of the premium webinar, papertradingmastery.com. Just a quick commercial note there, but what I want you to consider doing in life in general, for that matter, is putting things to the test. Maybe you're not cut out to be a day trader. Maybe you're better at swing trading. By testing, I mean beyond the mechanics of the specifics within your own personal world as a trader right now. I mean looking at different instruments or different time frames, which is our third point, different time intervals. But for example, maybe trading the E-mini futures is a really bad idea. Why would you continue that this year and keep losing money at that? Or maybe you're trading penny stocks, which is equally foolish. Why would you be doing pop and drop video game type trades and blowing up your trading account? Instead, you may want to consider going back as a core to maybe swing trading stocks or slower paced intraday trading. So whatever works for you in your time frame that helps you improve your trading, look at testing and proving it out for yourself with paper trading. And you might want to click papertradingmastery.com to see some thoughts on how to test that. Different time intervals. Maybe your swing trading round trips are better for, say, 5 to 7 days. Maybe you've been letting things go too long, like 2 or 3 weeks, and you get back profits. Or for your day trades, maybe you've been too slow, or maybe you're entering later in the day, like after 10 o'clock, after the volatility has gone down and it's a bad time to trade. And instead, you should be trading the open, like you can do at my live room at tradingtheopen.com, between, say, 9:35 and 10 o'clock is a core time frame. Anyway, focus on testing and experimentation with your timing, your instruments that you're trading, your stop loss sizes, all those critical variables for success in professional trading. One of the things that I'm a big fan of, and you'll see this echoed throughout my network of dozens of websites, is to focus on simple breakouts. Keep things more simple than you've been doing. You may be using too many derivative lagging technical indicators that don't help you. I like to focus mainly on price action. I'm a price action professional breakout trader. That's what I do. You can add other things at your peril. You can try stochastics and RSI and CCI and MACD and all that kind of stuff. But in general, especially for equities, simple, strong breakouts with sustainable trending charts is the way to do it. One thing you may want to focus on as well is to map out, make a quick flow chart, or at least a thumbnail sketch of step by step what are the key process activities in your trading. And again, if you opt into my email list at trademastery.com, you'll get a downloadable PDF flow chart that maps out a step-by-step trading process of exactly how to scan for, how to manage entries, how to use your stops, how to build or position size or scale into winning trades. Have a process that you follow and figure out where things are going sideways for you. catch it earlier rather than later in your process. Maybe your scanning process, for example, is bad, and you are, say, trading $3 stocks, like these amateur kids that don't really know how to trade do. Or maybe you're trading the wrong instruments, like futures contracts that chop all over the place and get you stopped out. So from a scanning standpoint, I urge you to take a little more thought into how you scan for entries and exits. And a lot of times it may be that you're headed in the right direction. And I'm very much focused on helping you become more successful as a trader at TradeMastery.com. That's what I do. I help so many thousands of traders, but what's good for one educator may not be good for another or for a trader who's trying to learn. So make sure that you match or test out or adapt your process to what makes sense for you personally in a way that helps you build more winning trades while keeping smaller stops. That leads me to our tip number 6, or the 6 of our New Year's trading resolutions. I want you to figure out, first of all, back when I was a corporate trainer for companies like Ford Motor Company and McDonnell Douglas and Rockwell International and Sheraton and other big companies that trusted me to train their employees, we always do a skills inventory. And I'm not going to do that here and now, but I just want you to figure out, what are you good at? Are you really good at keeping small stops? That's the most important skill to develop as a trader, okay? Or are you really good at scanning for and identifying breakouts, but maybe you're too late to pull the trigger? Maybe you're uncertain or overly cautious. Or maybe you're too early and you jump the gun and you get stopped out on a false breakout and then it runs without you. Or maybe you're trading the wrong instruments in the wrong time frame. There's a lot of ways that traders can go sideways in their trades. And from an educational standpoint, which is what I'm an industry leader at, I really like to focus on helping you figure out what you're best at. What are you personally really good at as a trader? Start from there. Kind of like when you go for a new job, are you a really good communicator? Are you a productive person with a great work ethic? Are you, honest and you have high authenticity and integrity, and you're somebody that people can rely on in addition to your technical strengths? As a trader, are you good at picking out great charts? Do you know which charts are actually worth trading this week? Are there charts that make more sense than others because of the trend strength? Okay, whatever it is, build on your own personal core competencies as an individual trader and make that the path or the starting step on your journey to achieving better trade mastery. And of course, it's all here. We're not here to become technical analysts. We're here to make money. So your 7th and probably least important, if you do all these things right, the natural outcome should be you could potentially make more money. But you got to get your upstream earlier process skills developed and honed to a razor's edge safely with paper trading or practicing to build more money and focus on your P&Ls, right? Yes, that'd be a bonus 8th resolution, is focus a lot more on your P&Ls than on simple chart patterns, because money talks. And whether or not you win or you lose, that is the game. It's not, well, did I find a good chart and I traded it and I kept my rules that I still lost? That's kind of nice. You still lose, that's okay, but it's much better if you get paid for your effort at the end of the day, right? So focus on your P&Ls. Don't be seduced by promises of becoming extremely wealthy. You're not going to become a billionaire trader, and that's not going to happen. So don't worry about that. Try instead to focus on building your capabilities as a function or an outcome of doing things like smaller stops, better testing and paper trading, test out different time intervals. So recapping here, focus on the simplest, strongest, easiest to identify breakouts like this. Not those pop and drop penny stock one-hit wonders that go up a lot and then drop a lot, because that's very dangerous. I get so many traders that come to me after being burned by these penny stock educators or cheap stock operators who, they lose their accounts or lose their shirts, and they say, hey, teach me something that actually has better potential and is less inconsistent. So anyway, focus on your P&Ls by mapping out your process, build on your strengths, and make it a great 2017 year ahead. Resources, you may want to join my Breakout Mastery coaching. We do once a month advanced, mainly stock swing trading, even though we do touch on stock intraday trades and markets of your choice too. If you're a Forex trader, for example, we could pull up a Forex chart and apply the techniques there as well. But it's mainly for stock swing traders. Just like Swing Scans, which is weekly with updated alerts, and Paper Trading Mastery, and so much more. Really excited to have so many of you here. You've been an amazing group, and I really appreciate the ongoing loyalty and support. Just a word to the wise, like I keep trying to help educate the world's traders. As you guys know, if you've tried trading penny stocks and gotten your head handed to you and lost so much, like most people do who trade the cheap stocks or the penny stocks, I get it, they're appealing. I call it fool's gold, because just because something's $1 a share doesn't mean it's a good deal. It's $1 a share for a reason. It's a crap instrument, right? So you don't want to waste your money on instruments that are unpredictable, like bad people. I call things like sub $10 penny stocks what a fool's gold for poor traders. So instead, look for things with better trends and better sustainable runs as your core starting place as a trader. And if you do trade cheap charts, things that have a somewhat sustainable trend like this one, BCEI, make a little more sense, right? This thing actually did triple from 70 cents to over 210. But that's very risky. That type of chart, that's much riskier in my professional estimation than something like this that has a nice, clean, sustainable breakout trend. So even if you trade smaller shares, because of capital limitations, you're not probably going to be trading 1,000 or 5,000 shares of a $50 stock. It's still fine to just trade 100 shares or 50 shares. So build on your wins, look for great stocks, and make it a great year ahead. One of the things that I really appreciate in the opportunity to work with all of y'all is to give you lessons learned from the trenches of what I've learned in both my winning trades and my stop losses. And a lot of it is mainly tight stops, strong charts. That's kind of it, right? That's the if I were to say the holy grail for good trading, it's all about risk management with really super tight stops as a safety net, and combine that with sustainable trending breakout charts that are likely to, no matter where, I always ask a chart, could I have made money with you pretty much no matter where I threw a dart at it to get in? And if the answer is yes, then it makes for a much more appealing trade to me. Just like dealing with people, no matter where in their lives your life intersects with theirs, if they are at heart a hardworking, honest, and good integrity, authenticity, good, reliable, hardworking person, no matter when in your lives intersect, it's likely to turn out to be a good outcome because you're working with people that are honest and authentic. And same thing with your charts. Is it a good, honest, authentic chart, or is it some pop and drop, crap chart that is going to just burn you? So just because it's cheap doesn't mean it should be appealing for smart people. Just because a lottery ticket is cheap doesn't mean it's a good play. Just because going to Vegas and betting 16 red on a roulette wheel is cheaper than, let's say buying into a poker tournament doesn't make that a better deal. If you're a good poker player, it's much better. Speaking from experience, I won in my first poker tournament years ago. If you have an edge, if you have a definable edge, then that's something you want to work with. If you don't have an edge and you're trying to engage with risky business or risky instruments, then it's going to go sideways. So focus on these 7 tips: smaller stops, testing and paper trading. Test out different time intervals, the duration, the round trip of your trades. That's a key interval that it took me quite a while to test out, but that's a key one to focus on. Also, keep it simple, right? The KISS principle, keep it simple with the strongest, cleanest, obvious breakouts that are likely to keep going up with a nice 45-degree angle type of move. Map out your process step by step, build on your strengths, focus on making more money as a reward, and make it a great year ahead. So looking forward to working with all of you. It's been a real honor. This is Ken Calhoun, TradeMastery.com. Until next time, this concludes this episode. Trade with passion, trade to make lots of money, trade with small stops, and make it a great year ahead. Goodbye. Be sure to join my subscribers at swingscans.com and tradingtheopen.com so you can see these types of alerts in each week's markets.